asked about stops. So there's two major stops. There's, buy stop and then a buy stop limit. Like what Shake just mentioned, when this name was gapping up huge, again, it worked this time, but if it just gapped up 30 points in reverse, Mustafa would not have been as happy about this trade. So
Right.
in much more volatile names, especially around earnings season, like if there's a level lining up during earnings that setting up through 100, but you don't want to get marketed in at 120. Those are times where you put a buy stop limit in. You're willing to pay up, say $1. You put that in. If the stock gaps up 20 points or 30 points off earnings, your order doesn't get triggered. You missed the trade, that's fine. But those are times, especially very volatile, momentum names. Those when buy stop limits can be beneficial. Now on the flip side, when it comes to sell stops, just use sell stops. Do not try to time your being wrong and getting out at a certain price. I can't think of one time I've ever wanted to use a stop limit order to get out of a trade.
No, never.
Yeah, so on the way up, buy stop or buy stop limit. On the way down, just sell stop.